My guest is joining me virtually right now. He's Mr. Femi Oladehin, senior partner at Argentile Capital Partners. Welcome to you, Femi, and thank you for joining me today. Hello, Femi, can you hear me?
Can you hear me? Can you hear me?
Hello, Femi, are you there? Can you hear me?
I can hear you. I can hear you clearly, and I
Okay.
hope you can hear me as well.
Yes, I can hear you now. Welcome to the program, Femi. So good to see you. Though I'm not seeing you right now. Please, can I see Femi? Okay, good. I can see you now. Femi,
Aha, fantastic.
Femi, good to see you. Good to see you.
Yes, Happy New Year to you too and to your viewers as well.
Yes, Happy New Year. Is it New Year or New Year's? Because I think the last time we met, we saw was at Wimby's
Yes,
program. That should be 2021.
2021,
No,
2022,
2022, yes.
2022
That,
before the elections.
yes,
Yes.
yes, that's a long time. Okay, Femi, let's get into it. We're talking about the economics of Nigeria's rising inflation. But I would like you to really unwrap the data released by our statistics agency. And, most of us don't really understand some of the things that we talk about on shows like this, because some people will be like, Nigeria's inflation is 28.9%. How that one take concern me? Some people will be like, it's even more than that. Some people, they don't even understand it. So can you help my viewers unwrap the details according to the statistics office? And if we can also have that data on set, I will appreciate it from my team.
Okay. So this is the way inflation works. Basically, inflation is defined as the variation of prices. So effectively, if you were buying something 1,000 naira last year and you're buying it 1,500 naira today, we would say that inflation is running at 50%. So what effectively the data being released by the Federal Office of Statistics does, however, is to understand that there are different components and different areas in Nigeria. So prices may be moving at a faster rate in Lagos than they are in Kaduna or in Benue, simply because, again, urban inflation and rural inflation don't generally run at the same rate. So when you see this, the Federal Office of Statistics release a 28.9 number, that number is an average number of all of the different areas where data has been collected. So in instances where rural inflation, I mean, for example, Kogi State, for example, has the highest urban inflation number, which is higher than 30%, probably closer to 33, 34%. Lagos also is running at about 32, 33%. But you then have areas of the country where inflation is running at a lower level. And what happens is that investors, I mean, the FOS would blend those numbers and come up with a single rate that reflects what they would call the national inflation average. And that's the number that we're looking at. Now, what should concern people is the number that you're showing on screen now, which is the month on month increase. So we've seen a significant rise and gives you a trend of exactly where the market is going to. A month on month increase of 2.3% is significant. It shows to you that prices are still rising. Whilst we were all hoping that the numbers were going to start to plateau towards the end of 2024. But the truth is that, as you would imagine, there are certain drivers in December that usually mean that festive spendings increase rates dramatically. So the charts on the screen are explaining what I was saying. Rural inflation is lower than urban inflation, which is running at 31, 32%. And when you then dissect this number down to locational levels, certain states will be on higher levels. Now, there are certain things that we usually focus on. One of those are the what I would call the non oil or the non energy index, which is one that strips out you know things like food, the price increases in food prices, and all, because that's where your real core inflation is. That's the core inflation that really affects people on a daily basis. So whichever way you look at this, inflation running at 30% is a 30-year high. Actually, the last time we had this sort of numbers was during the military regime, the
Yeah,
hyperinflation period we had during
exactly.
Abacha's
Yeah.
time. Yes. So these are very interesting times for us as a country. And the truth is that our monetary policy leaders are facing a significant problem. and that they need to find a solution to.
Mm. Femi, you've raised a couple of issues, and let me see if I can really unpack some of them for our further analysis. You talked about urban inflation. Of course, from what the Statistics Office has just released, it means that those of us living in urban areas are really reeling from the pain of inflation. Nigerians in the urban areas are suffering right now more than those in the rural areas, and perhaps it's a bit understandable because perhaps for food, when it reaches the urban areas, because of high transport costs also, which was reflected in
Yes.
the data, it would impact the prices of goods as well as services here in the urban areas. How would you really look at the patterns between rural as well as urban inflation in the last few years? And I don't know if you also saw something interesting, taking a look at states now, inflation in states. We see that Kogi State, it keeps on coming up, and I don't know what exactly is the matter with Kogi. Do you understand? Because it's a confluence state, it's like in the middle, but it keeps up coming up in terms of high inflation statistics there. So I would like you to really explain, and perhaps why we also have this trend, this period, where rural inflation is a bit lower than urban inflation. Not that rural people are not suffering from inflation. I needed to
Yes.
clear
So,
that to our
so
viewers.
thanks, Nancy,
Yeah.
and very interesting analysis there. So one of the reasons why Kogi State, for example, seems to be an outlier is actually the economic makeup of the state itself. Remember that Kogi, for example, houses the Dangote cement
Cement,
factory.
yes.
It also is a state that does not have an airport, and does not have, within some level of proximity, um, variables that can actually reduce direct transport costs. Also, the landlocked nature of Kogi and being in the middle means that imported goods, even imported goods that are coming from a place like Lagos, especially because Kogi has no airport, would mean that certain costs are going to be higher. So one of the things that that is telling us is that industrialization, or in a highly industrialized environment, there is a tendency that your inflation is going to trend higher. Now, when we unpack the numbers between rural and urban, in the urban areas, there are certain variables that drive the higher inflation numbers. And this is very interesting, and you would understand this now. One of the key things that drives high inflation numbers in the urban areas is housing. Now, you would imagine that in rural areas, most of the rural areas are owned by the occupants of the property. So significant increases in things like rent are not likely to happen in rural areas. But in the urban areas, where rent is a significant portion of the spend of the average person, urban areas have less density, sorry, higher density in terms of occupation or occupancies. And that in itself means that you will be paying more for rent in the urban areas. And of course, you talked about the transportation costs for food. Most urban areas do not have farms within close proximity, so food has to be transported to them and also preserved, as against in the rural areas where food can be consumed on the day of harvesting. So those are key variables that drive those numbers. And urban and rural inflation numbers.
Okay, I'm really curious about this Kogi, Femi, and let's stick with it a bit because, like I mentioned earlier, if you take a look at the inflation numbers coming out every month from the MBS, is Femi still there? I hope I'm not talking to myself. Okay, okay, the network is frozen at this point. Should we take a break, then try and come back to connect with Femi Oladehin, who is the senior partner at Gentile uh, partner capital partners. Let's quickly take a break, but let's use this break also to send for you to send your questions as well as your comments to us. You can connect with us, ask any question you want to ask. You can do that by even sending us a WhatsApp message, and I hope that the handles will be on the screen. We'll be right back. All right, welcome back. Femi Oladehin, senior partner at Argentine Capital Partners, is still with me. Femi, sorry about the network. You know Nigeria's network, and it's really so sad that even here at AIT we have fiber optic, fiber network. As in, I hear the network day, but it's still they misbehave. Do you know sometimes? So, but anyway,
It's one. Don't worry, we're used to it.
so let's just move ahead. I was asking about the Kogi again. I'm asking about Kogi State again because I'm actually curious. Like I said, of course, Kogi seems to be like a pathway. Anywhere you're coming from, you stop in Kogi State or Lokoja no, yeah, or as in Kogi now, isn't it? And on
No,
Lokoja,
no,
if,
no.
no,
It's
or
in
as in on
Ondo.
those states, Lokoja, I mean,
Yes,
so
yes.
you would really stop there. So I'm actually uh, thinking if food definitely is cup, there should be that pass-through effect. So it shouldn't just be that Kogi is just a pathway. So I really want to, because Kogi is always featuring there. While Kogi is a transport
So the
pathway.
truth is that what you would understand again, why is inflation a problem anyway? Inflation is usually a problem because there is significant cash available, but there's fewer goods to be bought, and that's one of the things we have to understand. So when you look at the Kogi state, for example, that's more or less a civil service state outside of the main industrial hubs, which are the the Dangote cement
Cement.
factory, the Ajaokuta Steel Company. So the truth is that there are certain large industries within the industrial zone of Kogi State. That means that there is imported inflation that will come into Kogi. So think about this way: a person who was working with Dangote Cement, who's probably earning the same salary as somebody who was in Lagos, and in Kogi, probably doesn't have the same um, benchmark of goods from which he can buy and sell from. That person is likely to be willing to pay more than the person who's in Lagos. So these are not unusual, especially when you look at the unique location that Kogi has. And like I mentioned earlier on, Kogi doesn't have an airport, which means that the only way goods are able to find their way to Kogi is through expensive road transportation networks. And that in itself would always contribute to higher inflation numbers. It's obvious that the significant level of inflation you have in Kogi would obviously be more on the urban side. I would imagine that rural Kogi doesn't see the same level of inflation that we're looking at.
Okay, you talked earlier about historical inflation that we've seen, and when you said it, something just clicked in my mind, which is, I don't know if you've observed what kind of trends you've observed in the past concerning historical data about inflation. The
Mm.
last time we saw this kind of inflation data, it's during the military era. And you know what came to my mind when you said that? Our former president was a military head of state at the time, and when he was there as even military head of state, inflation also skyrocketed. He came back as a Democrat, as we were told. Economic policies were not also, they were also a mismatch of economic policies. And it's even from then that we've seen inflation skyrocketing, if you would agree with me. The data actually shows this. In the last 30 years, we've seen inflation skyrocket. The only time we really had inflation, I think, was during Sanusi days when inflation was really tamed, that you were having like 150 naira to $1. I wish we can go back to that. So what kind of patterns have you really observed in the past, and perhaps mistakes of the past that we've been making, that's been making inflation evolve over time? Because this inflation is really a beast, and it's been very, very, very stubborn. You know, agree. This year they say no grief
So,
for
so
no grief
Nancy,
for
it's actually
everybody.
very simple. It's very easy to understand what has happened. Whenever you have an unindependent central bank, um, you are always going to run into this kind of problem. And without any of doubt, anyone who has followed the Nigerian government in the last 9 years knows that we had a very unindependent central bank, where the central became the side pocket of the federal government. Now, one of the things you must understand that the biggest problem we've had in the last probably 4 years, because the central bank went to printing. The central bank has printed over 30 trillion naira of new liquidity in the last 8 years. That liquidity is what has created the inflationary environment that we have. And that if the liquidity overhang continues to bedevil the market or to bedog the market. So we go back to the same period when the same president we're talking about, was president, it was the same thing. There was significant monetary loose monetary
Yeah.
policy, where the government was overreaching. And this is it. Like, look, Nancy, economics is a science. It's not an art. Economics is mostly a science. It's that 1 plus 1 is always going to equal 2. If you do certain things and you do not rein in fiscal profligacy, you do not rein in monetary rascality, as I would call it, you're going to have a high inflation environment. So even the pressure that you're seeing on the naira is a reflection of the weak monetary policies that we had in the last 8 years. And until we get to a point where we're able to ensure that there's complete independence, by the central bank is only focused on its original obligations, which is monetary stability, exchange rate stability. We will continue to see this sort of environment where inflation just goes completely haywire, and the people are the ones who are paying the price for it. Look, there is also something that I used like that I need to mention here. You know, one of the things we also have to understand is that the inflation numbers that we're speaking to today, I've always challenged the FOS to actually publish the basket of products or goods that they're using for their inflation calculation. Uh, in our market or in our clients, we feel that the more reflective impact or the more reflective rate of inflation is actually reflected in the behavior of the currency. So if you look at the way the naira has devalued in the last 12 months, over a 50% depreciation in the currency, that actually should give you an indication of where inflation really is running at. So we believe clearly that the inflation number is more reflected in the 45% depreciation in the currency from January of 2021 of 2023 to December than the FOS number of 30%.
Yes, because they are. They are all prices actually. So it must it must reflect
And
that.
and what we generally say about inflation, I mean about the exchange rate, is that the exchange rate reflects the inflation differential between markets. You know, so if US inflation is running at about 6%, 5-6%, and the naira is running, and the Nigerian inflation is running at 28%, as we are told, really, then the effective devaluation in the currency we should have seen is around 25%. But we're running at 45%. There is a problem somewhere.
Now, if you take a look at the policy trilemma that the central bank is facing, since let's dwell a bit on the central bank because the primary mandate of the central bank is price stability. And the posture of this current central bank management is that of price stability because I was speaking with Yemi Cardoso in December and I asked him the question around, you know, controlling inflation. And he said, Nancy, it's about price stability. That's what we are going to be looking at this time, that his management is about price stability. Where am I going with this question? Policy trilemma, you have interest rates, you have inflation rate, you have the FX rate differential, which we're talking about. Now, if you see the posture of the central bank in the last few years, as well as the new posture of this central bank management, with no monetary policy committee meeting, and in fact, he did say it at that time that they are still studying this thing. You understand? So, how do you think that, one, first question around MPC, do you think that the MPC, there's any need to meet the MPC to meet? Because we have our MPR rate at 18.75%. The second question is the meetings of the previous MPC, the transmission mechanism has been very weak. So, what can be done to strengthen this transmission mechanism so that whenever the MPC meets and whatever announcements they make in terms of MPR and asymmetric corridor, liquidity ratio, and what have you, will really pass through the market and correct the market? So, what kind of corrective monetary policies should we see? If we even just oppose it to even other African countries, you see a bit of monetary policy working, not to talk of US and UK. If they just adjust it, inflation will just come under control. But here, no grief for anybody. Dying we did now this year.
So let me answer your first question.
Yes.
Is the MPC necessary? Look, Nancy, markets like clarity. That's the thing. Markets like clarity. Once there is no clarity, the market is going to go into overspin. There's something we call inflation asymmetry in the market. That means that everybody gets inflation at the same time. The biggest problem that Mr. Yemi Cardoso and his central bank have created for the market is a lack of clarity. By not having an MPC meet, you have left the market for 6 months without any clear direction as to where. Yeah, you can make the speak and say, oh, we're focused on monetary policy, we're focused on this and that, and we're reviewing. The reality is that the market needs to hear you speak with clarity. If there was one thing that we always accused Governor Emefiele was that whilst he kept talking and giving us some clear idea of how he saw monetary policy, his actions by almost the rascality of the monetary easing that we saw was there was a discontenance or a disconcert between his actions and the pronouncements of the monetary policy authorities, and which was why all of the interventions that were done failed. You are increasing CRR, you are expanding the asymmetric corridor and all of that. But the point is, you are still printing the naira. So that in itself meant that whatever it is he was doing was going to fail. However, we now have a central bank governor who has said we're not printing any naira. That is second thing he's also said to us is that we're going to focus on monetary policy and fiscal policy alignment. That's also fantastic. However, what we then need to see is them coming out as a committee to address the concerns of the market. You see, when you do that, people are all going to be able to plan and look forward.
What are the concerns? Femi, sorry to cut you short. What are the concerns that you want Cardoso to address?
So first things first, what's the direction for interest rates? We need to know. Businesses need to know. Are we going into a higher interest rate environment? Because as a CEO of an organization, I want to be able to plan my finances with some level of clarity. Where should the naira be trading? Give us a guidance of where you think the naira should be trading, so that I can make plans. We reduce the level of volatility that we have, even in the INE window, where you're seeing a 40% volatility within one trading day. That is completely ridiculous. Even the Ugandan currency during a day, wouldn't have traded with that level of volatility. So you see, markets like clarity. One of the things that the US has done in the last 12 months is the consistency of the message that comes from the
information
from commission. And that's really what we want. Are you a hawkish central bank, or are you a dovish central bank? What is your view on the exchange rates? What is your view on the direction for monetary policy rates? And where do you see these things settling at the end of the year? Businesses will then be able to make their decisions on the basis of that clarity. But as long as we leave it vague, verbose, and we can only hold on to occasional statements from the central bank governor, like the last one that he did at the bankers, at the Chartered Institute of Bankers. That can't be the way that the central bank is going to effectively deliver on the concerns of Nigerians.
So how do you see inflation behaving, at least from December that we had 28.9%? How do you see inflation behaving? Is it going to be volatile? Is it going to be trajectory, the inflation figure since December? And do you think we've peaked yet, or we're still
we definitely haven't peaked.
Wow.
We definitely haven't peaked. So we do not expect we're going to peak until about July of 2020.
That's a whole lot.
Reason. So there's something in economics we call the base effect. The base effect is what happened 12 months ago. Because remember that the way Nigeria records inflation is that we use a moving average. It is what happened 12 months ago. So when you are calculating your fuel price, for example, today you are still comparing today's fuel price to the fuel price as at February of 2023, which was 180 naira. So you're comparing that. So you're still going to continue to see that incremental effect. But when we get to July, where, for example, exchange down 1,000 naira thereabouts, and then your base comparison is obviously a higher number. And then you get to July of this year, when fuel prices are now being compared to 600 or 580 naira. You will then start to see some bit of decline. So in our analysis, we expect we're going to peak around the 31% level by the time we get to June, July of 2024. And then we'll start to see a gradual deceleration. depending on what the central bank does in the next 3 months.
And I assume that this your analysis is for the headline inflation and not for perhaps urban inflation, rural and core, because even as headline inflation ticks up, other inflation rates will also will be sticky as to the upside.
I mean, that's true. And you have to also remember that there's something we need to talk about that no one is talking about. The president has told us that they removed the subsidy on petrol prices. But the truth is that you and I know that there is currently a subsidy on petrol prices. The dichotomy between diesel prices and petrol prices is currently about 400 naira. So therein lies a dilemma that there is actually still significant room for petrol prices to rise. Now, unfortunately, even as we've seen crude oil prices taper down from 100, almost 95, $98 last year to currently around 75,
70.
78. The problem is we've more or less reflected that deceleration in our exchange rate. The exchange rate has moved from 1,000 to 1,350 as of this morning. So whatever benefits you're getting from lower headline prices for oil related products, you are losing it on the exchange rate. So which means that we do not expect to see any significant price reductions in diesel and petrol prices. So look, the reality is that what I said is when we were preparing for the 2023 elections, I said that whoever won the election was inheriting a poisoned chalice. Now, it was funny that I said the same thing in 2015, but this poisoned chalice is even worse now because the variables that you are chasing at the same time are at a time when we've had our reserves significantly depleted, so we can't even defend the currency. Is at the time when there is limited monetary room, monetary headroom for the central bank to operate within. So it is a very interesting time to be central bank governor. I do not envy Mr. Cardoso. And there was something I was reading on one of my business platforms yesterday, and the person said perhaps what we needed this time is a central bank governor that is probably very well exposed to development finance and similar things. But the truth is we have the central bank governor who has some level of credibility as a professional and as an ex-banker. But the truth is he now needs to show the market that level of guidance and dexterity that we need in this crisis. I think it's only someone who's in pretense mode that would say that we're not in a major crisis right now. We are in probably the worst crisis we've seen since 1994, after the June 12th crisis, and from an economic point of view.
You're just spot on, Femi, on that, because I was actually thinking about what you said in terms of energy prices. If energy prices are adjusted to the upside, inflation will definitely go higher. And perhaps even the inflation we're seeing right now is a bit cosmetic because it does not really reflect the prices on the ground.
Yes.
I was even speaking.
Exactly.
Exactly. So it's a bit artificial. They are just trying to, it's cosmetic.
And as you see, the collapse in cosmetic inflation is going to happen when Dangote refinery starts producing petrol. So today they have not calibrated well enough to be able to produce PMS. So they're still producing diesel and the other products. But the moment they calibrate and they need to sell their petrol to the local market,
NNPC
then
Limited will be forced.
oh, there's no choice. There's no choice.
There's no choice.
That adjustment has to happen. So, which is why we believe that we are not going to peak on core inflation till we get towards the second half of the year. There is still significant room to go. And
Brilliant.
also something else to mention,
Yeah.
Nancy, is that wage adjustments that the federal government has approved
Thank you for saying that.
are only going to start happening now. So the effect of those wage adjustments are only going to start to filter into the system. And that's why I said, look, honestly, the government they've literally swallowed the poison chalice. And this is when we're going to know if the government has the capacity to solve Nigeria's problems. I mean, I would say to you though, not being one to prevaricate when it comes to these things. The early signs are positive, of the top type of policies that the government has come up with and some of the unusual ways they're trying to solve the problems. I think that the jury is out if they're able to sustain that level of professionalism by not looking for, for what I'll call quick wins to the detriment of long-term stability.
Okay.
And we're taking significant pains now, and it's important that the government must stay the line. I was one of the people that was disappointed that they didn't allow fuel prices trade appropriately. Yes, it hits me in the pocket, but then it then gives you an indication that this is a government that is going to stick with its guns irrespective of whatever happens. And perhaps that's what we need in Nigeria right now.
So what are the policy recommendations that you will give to this administration in terms of controlling inflation? Because, like I mentioned at the earlier stage, perhaps it's not even just about the central bank controlling inflation, because we've seen a demand pull and the cost push effects on inflation. We've also seen definitely structural impacts. Transport, that's not the purview of the central bank. Having good roads, that's not the purview of the central bank. Giving good security is not the purview of the central bank. So what policy recommendations would you have right now for the government to be able to tackle inflation? From your own analysis, the end is not yet close. We're still going to be feeling the pain. Then the second part of it is how much pain and how do you think that as Nigerians we should weather this inflationary storm? Then I will not allow you go without also talking about the markets, Femi. What is wrong with this Nigerian stock exchange? That is this NGS.
But there's an
Wait,
answer to
wait
that.
till they drink.
But there's an answer to that.
No,
There's a clear answer to that.
Yes, go ahead.
There's a clear answer. So let's start with policy. Like I said, there is limited policy bandwidth that the government has. That's the truth. Now, what needs to happen is the difficult decisions need to be taken now. And what you are going to hope is that a base effect in 12 months will start to taper those numbers. So if you take your poison pill today and you survive it, in 12 months' time, you've solved that problem once and for all. And one of those would be, obviously, we need to increase interest rates. Even if the purpose of that is to ensure that you're able to mop up some of the naira liquidity that has created the problem that we have with the FX rate. That is something that needs to be done. Now, the problem with that is as you increase interest rates, the real sector is going to pay for it. And that is then the responsibility of the fiscal part of the government to ensure that the policies, tax incentives, the right types of incentives are put in place to encourage investment. That is one of the problems that I have with this current government, in that there is just a desire to focus on taxes to the detriment of the people. I don't think that's the way to go. I think we actually should be looking at a government that is looking for ways to reduce taxes so that the real sector can start to show some life. So that's number one. Number two is increasingly the central bank has to find a way of mopping up the remaining liquidity that's within the system. That 24-30 trillion naira that Emefiele printed has to be mopped up one way or the other. And the central bank has quite a wide range of instruments that it can use to do that. And it needs to find a way of ensuring that is done. Now, the third part of it is what I would call the developmental investment. Developmental investment is critical because one of the biggest problems we have in Nigeria is the cost of doing business. The moment you are able to ensure that the core infrastructure available to the country is business supportive, and that the legal framework or the what I call the regulatory framework is not driven towards stifling business, but driven towards encouraging business to deliver, then you are going to see a situation whereby in another 12 months, people are going to take long-term investment decisions to the benefit of the country. And then obviously, the speculation that you have in the currency because of the lack of clarity is also something that the central bank needs to come out and be clear about, to come out and say, this is where I think the Naira should be trading, and these are the policies that I'm going to put in place to fix that. Now, to go back to the stock market, there's nothing unusual to the behavior of the stock market. If you have a high inflation environment, the stock market is the only place where people are going to be looking for returns. And what you're seeing is people piling into the stock market. Remember what happened in Zimbabwe?
Yeah.
Zimbabwe had the highest stock performance last year.
But
It's
Femi,
meaningless.
Femi, they're always saying that the stock market seems to be a barometer of the economy. So is it the barometer? The barometer now is measuring the disalignments in the economy. Is that what you mean?
Effectively, that's what it is. Again,
Okay.
go back to the liquidity overhang that I talked about. There is significant liquidity in the system. People are looking for where to put that liquidity. the stock market is also obviously a place for them to put it. And then don't forget, this is also a stock market that doesn't have a significant breadth in terms of the number of securities that are listed on it. But this is the story for you, Nancy. Before you get excited about the performance of the Nigerian stock market, just dollar adjust that return, and then you just realize that it's a meaningless return. Yeah, last year the market actually returned probably about 2 or 3% in US dollar terms. Why should we be excited about
No,
that?
but that's still a lot. Even in the US, if you have 2-3% return, is a lot. Even in the United States.
But the S&P returned 19 to 20% last year. So therein goes your argument.
Yeah, exactly. You've really
So
flawed
yes.
me there, in dollar terms. But in naira terms, we'll be seeing it as big money.
Yeah, we think they were, but we're all poorer in naira terms.
Exactly.
Very
market. Quickly, we have just a few seconds. Pain on Nigerians. How do we navigate this? Very quickly, Femi.
Look, I think that the government owes Nigerians to actually talk to Nigerians where the future is. This pain, there's no way for us to survive it. I mean, to ignore it, it's there. But the communication that comes from the president is extremely important. There was one thing that I faulted our former president for, was that Nigerians just never heard enough from him. I think that President Bola Tinubu owes Nigerians constant and consistent communication as to how he sees the future and what he's doing towards delivering that future to Nigerians.
Thank you very much, Femi. Brilliant conversation. I always have such brilliant
Nancy.
Conversations with you, and I hope you had the same with me today, my friend. It's
Absolutely,
really been
and we should do this more frequently.
Exactly.
I'm really happy to.
I am motivated to do that, Femi. It's been a while since I spoke to you on the show. So welcome back again, my friend. We'll do this again sometime. Thank you very much.
All right, then, Nancy.
Absolutely
Thank you so much.
brilliant. All right. Thank you very much. I've been speaking with Femi Oladehin, who is the senior partner at Argentile Capital Partners, and we've been talking about the economics of inflation. That's the much we can take. I am now